So one thing I want all my clients and realtors to understand is that I have a different perspective of mortgages. It's one of the reasons I started Concept Mortgage. Mortgages to me are a different concept to what a lot of other people see them as. So my question to you guys today is, what is a mortgage? The most common answer I get for this from clients and realtors is it's a loan secured by real estate. And in essence, on the surface level, that's really what a mortgage is, of course. It's a loan secured by real estate, but as a licensed professional, I see mortgages a little bit differently. Having done this for 17 years, I've seen a lot of the changes in the marketplace, from the portfolio division to the way Fannie and Freddie Mac are being handled. And so today I see mortgages as a financial product. Of course, they are a loan tied by real estate, but at the end of the day, it's a financial product that's used to fuel a massive part of our economy called the bond market or the mortgage-backed securities market. So in this whole market of mortgage-backed securities, there's really only three sources where you can get funding from, okay? And this is all the United States, so it doesn't matter what lender you go to, who you talk to, what state you're in, there's only be three sources of funding that you're going to get for your mortgage, okay? So the first three are, first one is conventional, okay? This includes Fannie Mae and Freddie Mac. Okay? They're the main securitizers of mortgage products. Okay? They make up our primary mortgage-backed securities market, which has trillions and trillions of dollars put into the Federal Reserve by it. It's used to hedge losses. It's used by investors to hedge off losses against stocks, things like that. So all the loans come into Fannie Mae, Freddie Mac. They determine the regulations, the requirements, the rules, the down payment options. All of that stuff is determined by Fannie Mae, Freddie Mac. Okay, so if you go to Wells Fargo, Concept Mortgage, Blue Adobe, any of those lenders, they're going to give you a conventional loan. The guidelines, the rules, the requirements are going to be all the same no matter where you go. The second source of funding is going to be your government-backed securities. Okay, these are securitized by Ginnie Mae. This includes loan programs like FHA, VA, and USDA. Okay, these are all sold to Ginnie Mae, securitized on the secondary market. The biggest difference is that each of these agencies make up the rules, the requirements, and the guidelines for these products. Okay, FHA is 3.5% down, VA is no money down, USDA is used for rural properties, includes no money down as well. Now your third type of loan that you can get is going to be in this section of categories here, called portfolio loans. So this portfolio market is very, very small. It makes about maybe 5% of the market currently in mortgages. So this is 5%. Fannie Mae, Freddie Mac are currently sitting around 7%. And then government financing is around 25% of the market. Portfolio loans include loans like jumbo loans, bank statement loans, no income loans for rental properties, private money lenders, hard money lenders, all sorts of loans of that type. So prior to the crash of 2008, a majority of the market was in this private portfolio market, and these were all being sold as securitized AAA rated securities, subprime mortgages, and that's what typically caused the crash in 2008. So this is where a majority of the market was prior to the 2008 crash. After the crash, the mortgage market was rebuilt by Fannie Mae, Freddie Mac, and the United States Treasury. They're brought into conservatorship. We used FHA financing and conventional financing to fund most of the housing market between 2009 and 2015. In 2015, the portfolio market started to come back, gain a little bit of traction. Now, the way you have access, the way all lenders have access to these funding, is everything is done off of a wholesale or correspondent channel. Okay? As a consumer, you talk to a retail lender who collects all your documents, gets your loan approved by underwriting, gets your loan funded, and it's sold here to wholesale correspondent lenders with other loans that are bundled up in bulk, so hundreds of millions of dollars, and then those are all sold to Fannie Mae, Freddie Mac, which securitize those mortgages on the secondary market as a stream of income. So this is your mortgage market in a whole, a very quick snapshot. Lastly, when you're working with a lender or deciding who to pick as a lender, You want to work with a lender who's going to have access and has a wide view of this market here. This is going to give you the most flexibility in rates, service, and products. As an independent mortgage brokerage, we provide all these options for you with the best rate guarantee and a close on time guarantee for all your purchases. If you have any questions on this, please reach out and let me know.